Welcome back to Alpha Recap. We're unpacking a volatile Friday that left a clear imprint heading into the long weekend. As always, if you have questions, you can reach us at stockalpha.ai. So, what really stands out here is a mix of index chatter, a massive single-name collapse, and a wave of microcap fireworks.
Yeah, absolutely. Friday's tape was one of those sessions where headlines and momentum collided. Markets closed after a day that featured an index reshuffle rumor, a re-rating in one name that dropped hard, and a broad set of small caps and warrants running wild.
Let's hit the big three right away. First, reports suggested Berkshire Hathaway could be considered for inclusion in the Dow, possibly replacing Nike. Second, NVVE plunged in a single session, a real repricing event. Third, a cluster of small caps and warrant-like instruments posted outsized gains and crazy volumes.
And each of those carries different market implications. Passive flow shifts, forced selling risk, and extreme liquidity swings in speculative names.
Starting with the NVVE move, the company plunged about 61% to roughly $8.38 on about 1.5 million shares. That was a material single-session re-rating that many feeds flagged as conviction selling.
Wow, that's huge.
Right, and that kind of drop matters because it can trigger margin calls and compress liquidity, especially in names that are already thinly traded. Forced selling can cascade into other small-cap baskets over the next session.
So when a name collapses like that, it's not just one headline. It becomes a micro-ecosystem problem. Margin desks, prime brokers, and retail positions all come into play.
Exactly. And that feeds into theme one from the piece we're recapping: large single-day declines and concentration risk. There were multiple names down 40 to 60%, and a couple more than 50%, with a mix of penny and microcap issues showing real selling rather than one-off quotes.
Right. And beyond the ultra pennies, some higher liquidity names like American Airlines and OpenTable, well, the company behind OpenTable, both finished down about 4% on heavy turnover. So selling was broad, not just limited to sketchy names.
Which brings us to why liquidity compression matters. In penny and microcap markets, bid-ask spreads can blow out. Slippage becomes huge, and even modest dollar flows translate into massive percent moves. That makes execution risk a real concern for anyone trading these names.
Yeah, that tracks.
Let's pivot to the other side of the tape, the rallies. Theme 2 was all about momentum and retail flows.
Several small caps, warrants, and thin float issues spiked on outsized volume. One small cap surged about 70% on massive turnover. A warrant-like instrument more than doubled in a single session.
Honestly, I was a bit surprised by how big some of those warrant moves were. Warrant instruments can be extremely sensitive to leverage and expiry, so those swings aren't always tied to fundamentals.
Right, and that's a key point. Warrants carry multi-factor sensitivity. They amplify directional moves and have expiry dynamics. So a huge intraday gain can look dramatic, but not translate into long-term value for the underlying company.
So it becomes a question of momentum extension versus mean reversion. Are these headline-driven squeezes that will unwind? Or is there follow-through on Monday if filings or analyst notes back them up?
Exactly. Short interest dynamics and any weekend filings will be critical for follow-through. And speaking of high-volume winners, there was also a big move in an instrument linked to an ETF or leverage product. That was theme 3, the high liquidity group where institutional flows show up.
On that front, one exchange-traded name saw volume that suggested ETF or product-level flows. Another big name, a major streaming company, finished the day down about 7% on very heavy volume. Those moves in liquid stocks often reflect institutional position rebalancing and can affect options markets, hedging costs, and implied volatility.
The streaming pullback was notable because it came in a very liquid stock that had been rallying earlier in June. A correction like that can mean different things for different desks. Risk teams will be rerunning sensitivity checks.
Right. And when liquid names move a lot, the ripple effects into derivatives and volatility markets are real. That can push up hedging costs and change short-term positioning across the board.
Let's talk corporate headlines that were separate from pure ticker action. Theme 4 covered some of those. First, the Berkshire Hathaway for the Dow rumor. Analysts noted that an official decision from the index committee would force passive rebalancing flows and even talk about the swap moved benchmarks.
That's the kind of technical catalyst that can reallocate sector exposure overnight. If Berkshire did replace Nike in the Dow, passive funds that track the index would have to buy some Berkshire shares and sell Nike, at least in the short term. That creates a predictable but potentially large flow.
We also saw a defense-related winner. Enlight jumped after reports it secured a roughly $627 million Department of Defense contract for a joint laser weapon system. That's a near-time revenue catalyst that can change analyst models in that subsector.
And then, curveball. A leather jacket owned by an iconic chip company CEO sold at auction for just under $1 million. It's not a financial report, but it was framed as a cultural lift for the AI theme, which can buoy sentiment even if it doesn't change fundamentals.
That was a quirky one. And there was also a small disclosure tied to an Alphabet-linked entity. A modest sale, roughly $1.83 million, worth watching for insider ownership context and follow-up filings.
So when you step back and look at this, 3 patterns stood out. Retail and momentum dominance in microcaps and warrants, liquidity bifurcation between fragile pennies and high-volume liquid names, and the added weekend headline risk heading into a long weekend.
Right. The weekend risk piece is important. Several of these moves occurred right before the holiday, and absent clear catalysts, gaps are more likely on Monday if filings or analyst notes emerge over the break.
Quick reactions, short segment. Not what anyone expected.
Let's do a rapid-fire recap of selected movers. Brief bullets spoken. NVVE, down about 61% to about $8.38 on roughly 1.5 million shares. Several small caps plunged between 40 and 50%, amplifying execution risk. One small cap surged about 70% on very heavy turnover. A warrant-like instrument jumped more than 200% in a single session. A liquid exchange-traded name rallied about 25% on very high volume, suggesting product flows. And that big streaming name finished down about 7% on heavy turnover.
Those numbers underscore how mixed the tape was. Deep sell-offs and blowout rallies side by side.
So what are analysts and traders watching into Monday and next week? First, filings and company disclosures. Many microcap moves had no clear, verifiable catalysts, so 8Ks and press releases over the weekend could be decisive. Second, any official word from the index committee about a potential Berkshire inclusion in the Dow. That would drive passive flows. Third, whether heavy volume in momentum names persists or reverses. That will tell us if these rallies were technical squeezes or something more durable. And finally, watch short interest and margin data for signs of forced flow risk.
Right, and risk managers will be watching option implied volatility and intraday ranges in the liquid names for hedging cost changes. After big moves, implied vol can spike and stay elevated for a bit.
A quick reminder, this recap is informational only. Analysts note the market environment was dominated by momentum, retail flows, and liquidity dynamics, which increases execution risk and the likelihood of rapid reversals. This is not personalized investment advice.
Final takeaways. Watch for filings over the weekend. Monitor any index decision news. Keep an eye on volume continuation in the big momentum names. And be mindful of liquidity differences between penny issues and large caps. Risk signals matter now more than ever.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. Have a safe holiday weekend, and we'll be back after the markets reopen.